Hey everyone, welcome back to Corporate Decoder. Today we're diving into Acro Biomedical CO Ltd's latest report, and let's just say if you're looking for signs of a thriving company, you might need to adjust your expectations because this one is a bit of a wild ride. Before we jump in, if you're tired of corporate jargon and want a clear, simple breakdown of what really matters in these financial filings, make sure you hit that subscribe button. We also have a Discord community where we dissect these reports further and discuss the real-world impact of these numbers, so check the link in the description below. Alright, let's get straight to the heart of it, their balance sheet. As of June 30, 2024, Acro Biomedical had total assets of about $45,000. Now that might sound small, but it's actually down from about $58,000 at the end of 2023. So assets are shrinking, which usually isn't a great sign for a company trying to grow. On the other side of the coin, their liabilities are a different story. Total liabilities are around $321,000. Now compare that to the total assets of $45,000 and you can see they owe a lot more than they own. This means they have a negative net worth, or what they call a stockholders deficit, of nearly $207,000. If you're keeping score, that number also got worse compared to the end of $2027,000. If you're keeping score, that number also got worse compared to the end of 2023 when the deficit was around $257,000. If you're keeping score, that number also got worse compared to the end of 2020, $76,000. If you're keeping score, that number also got worse compared to the end of 2023 when the deficit was around $257,000. This is a clear indicator of financial distress. Now let's talk about the money coming in the door. When we look at their revenues, it's a striking zero. That's right, for the 3 months ending June 30, 2024 and the 6 months ending the same date, Acro Biomedical generated absolutely no revenue. This isn't a new problem either. Looking back at 23, their revenue was also zero. This lack of sales is a critical issue for any business. Scroll. Selling general and administratives. Even without sales, a company has to spend money to operate. For the 3 months ending June 30, 2024, their operating expenses were just under $9,000. This is primarily due to professional fees and costs associated with being a public company. That's a massive drop from the previous year, where for the same 3-month period in 2023, they spent over $3 million 23D services, largely related to services from consultants, and administrative services largely related to services from consultants. Scroll net loss scroll because they have no revenue and still some operating expenses. The company consistently reports a net loss for the 3 months ending June 30, 2024. The net loss was about $10,000. Again, a huge improvement from the nearly $7.2 million loss in the first half of 2023. While shrinking losses sounds good, it's really 2023. While shrinking losses sounds good, it's really a consequence of drastically cutting spending, not of improving business performance through sales. Scroll cash flows from operating activities. When we look at their cash flow from operating activities, it's also showing negative figures, meaning they're burning through cash just to keep the lights on, even with minimal operations. For the 6 months ending June 30, 2024, they used about $19,000 in cash from operations. This is a much smaller amount than the roughly $3,000 used in the same period of 2023, but again, this reflects reduced activity and likely reduced spending rather than improved operational efficiency. Scroll cash provided by financing activities. Scroll, where is the cash coming from then? Well, the primary source of funds for Acro Biomedical has been advances from a minority stockholder. For the 6 months ending June 30, 2024, they received about $20,000 from these advances. This is their lifeline. Without it, they would likely be out of business. The report explicitly states that they have no orders for products and have not generated revenue. This reliance on external financing, especially from a single source, is a major risk. Scroll going concerns us to a very important section, the going concern assessment. The accountants are saying that the company's ability to continue operating is in serious doubt. They point to the minimal cash, no revenue, consistent losses, negative cash flow from operations, and the fact that their stock is traded on the expert market, which is not easily accessible to the public. This all raises substantial doubt about whether the company can keep its doors open. This isn't just corporate speak, it's a warning that the company might not survive. Scroll, valuation of disclosure controls and procedure. Scroll, let's dig into their internal controls. The report states that their disclosure controls were not effective as of June 30, 2024. This is because of the inadequacy of their internal controls, their single employee being both the CEO and CFO who's part-time, and a limited internal audit function. Essentially, they're admitting they don't have a solid grip on their financial reporting. This lack of robust internal controls is a red flag for any investor. Scroll changes in internal control over financial reporting. The report further elaborates that their internal controls have material weaknesses. This is due to a lack of segregation of duties, not enough qualified accounting staff, and relying too heavily on outside consultants. The fact that the same person who is their only employee also serves as the sole director and doesn't have an accounting background makes it unlikely they can fix these issues soon. This means there's a higher chance of errors or misstatements in their financial reporting. Scroll, Sinatra Stroll, and who's signing off on all this? Pouchy Chu, the Chief Executive Officer and Chief Financial Officer. It's important to note that this person is also their sole employee and works part-time. This concentration of responsibility in one person, especially with limited accounting background, is a significant governance concern. Looking at Acro Biomedical CL Ltd. On the whole, it's hard to see a path to profitability. They have no revenue, a shrinking asset base, a current ratio that's deeply in the red, meaning they can't cover their short-term debts, and they're heavily reliant on advances from a single stockholder. The business model seems to be stalled, with past attempts at developing products through consultants yielding no results and expiring contracts. The company is essentially struggling to stay afloat, with its financial stability hanging by a thread dependent on continued financial support from a minority stockholder. The biggest strength, if you can call it that, is the drastic reduction in operating expenses, but this is achieved by scaling back almost all activity. The major risk is their complete lack of revenue and their dependence on external financing. Without a clear plan or any indication of future sales, their ability to continue as a going concern is highly questionable. My take is that this company is in a very precarious position. The financial numbers paint a grim picture of a business that isn't generating income and is burning through what little capital it receives. The lack of internal controls and the reliance on a single individual for all key roles are also major red flags. Unless there's a radical shift in strategy and a successful product launch is imminent, which there's no evidence of in this report, it's difficult to be optimistic about Acro Biomedical's future. What's your take on these numbers and what they signal for Acro Biomedical's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into corporate filings that cut through the noise. Don't forget to check out the Discord in the description for more in-depth discussions. Thanks for watching. See you next time.